Investors are also glued not just to Tesla's minute-by-minute jumps, but to Disney stock at this hour as the company gears up to report earnings after the bell. And what do we have here? We have a gain of 2.8%. And while the focus absolutely should be all about the debut of everybody's beloved Baby Yoda. Oh, look at that, Baby Yoda. Yeah, thankfully to The Mandalorian, which is from Disney Plus's streaming output, right? Along with Disney Studios racking up their sixth and seventh billion-dollar films of 2019. Could the deadly coronavirus outbreak take some real magic out of Disney's future forecast? One Disney bull says the virus will not only be costly to Disney, but could get way worse if it's not contained. That's Gerber Kawasaki CEO Ross Gerber. He is here live along with MediaTek Capital Partners managing partner Porter Bibb. Ross, how bad could it get?
Well, we just don't know yet, but you know, right. Seeing as that all the theaters in China are closed and they're about to release Mulan, you know, that's not good. And then you've got the risk that if any infected person goes to Disneyland or whatever, you know, it could cause a lot of problems if people get scared. So, you know, we don't want to jump to too many conclusions yet because a lot of drastic measures are being taken, but we're very concerned how this will affect tourism in general and specifically Disney, although I'm super bullish on the company.
Porter, you also have Shanghai Disney closed, and it's
Hong Kong
and Hong Kong as well. Those theme parks matter certainly. You know, that what do you expect the coronavirus, at least short-term effect, to be on Disney?
I think this could be maybe $100 million deficit for Disney with both theme parks. They lost the Chinese New Year last week, which is the biggest attendance period of the year, but it's not that important to the overall Disney picture.
Yeah, Ross's head is turning around like 360 degrees, even though, Ross, you are a big Disney bull. In fact, the last time you were on, more than a month ago, you said, I absolutely love Disney. And boy, have you seen a nice move since then. But what do we look at here as we spin forward beyond the coronavirus? I mean, I think we need to talk about streaming, but, you know, let's not forget cord cutting.
Right. So first of all, I do think whatever impact of coronavirus, if it's solved in a reasonable amount of time, like this quarter, I think you'll get an upside when Chinese people are allowed to leave their homes again. They're definitely going to go back to Disneyland and spend a lot of money that they weren't able to spend right now. But the real thing is Disney Plus subscribers. We have no idea how many they have right now, and it could be a big number, like over 40 million. But I think that's the future of Disney, and what's going to propel its growth is Hulu, Disney Plus, and Hotstar in India, and ESPN Plus. So they've got 4 great streaming services, and this is where they're going to drive a lot of growth in the future, and that's what we're looking for.
What about those subs, those subscribers, Porter? You know, a lot of them are at a promotional level. They came in either discounted or outright free. So can we really trust these numbers?
Well, independent researchers have said that over 10% of the Disney Plus subscribers are ex-Netflix, and they've dropped it. And over a third of the Netflix people are also Disney Plus. So the big number, I agree with Ross. I think you're going to see a huge step up. They went overseas last month for the first time. On day one in the United States with Canada and Mexico, they got over 10 million subscribers. They're going to be in the 30 to 40 million, and they're really going to start to dent Netflix's offshore subscriber base, because that's where Netflix is growing. They're shrinking in the United States.
But guys, there is competition. Apple TV Plus, Ross, what about that? And Comcast's Peacock.
Dead in the water.
Which one?
Yeah,
both of them.
Really? Yeah. What do you think? Porter.
Well, Porter, remember with Apple TV, they just hired the guy who used to run HBO.
They did. So
I do think he's super talented and could save
the
Apple
difficulty,
TV.
Ross, that they have is that AT&T doesn't understand what made HBO so great and so profitable.
Totally.
They're taking it mass market and coming way down scale in terms of the quality of the programs that they're going to offer.
And Comcast,
No,
Comcast is jumping right now by more than certainly Disney, 4%.
But I'm saying for Apple TV Plus, I think they might try to be more like the old HBO,
yes,
but it'll take them a couple years to get content really going. So I think they're both kind of DOA.
Okay.
Peacock is another. It's a hybrid. They're going to make it a free advertising sponsored business,
Well,
and you pay $10 and you can have cut the ads down.
We'll see
to
how that works
next to
out.
nothing.
Porter, always great to see you, Porter. And Ross, we know you love Tesla. And you took some off the table. I do have to ask you, we're really rushed here, but did you sell too early?
No, not at all. I have so much Tesla. I sold more today. You know, look,
Really?
we have so much.
But
Yeah.
nobody's talking about the 3 Chinese electric car companies that are all 10 times bigger than Tesla.
But
Well,
people
I don't
want
think it's that.
Teslas.
It's just when you make this much money, you have to take some profits. You know, you just
The best
have
short
to,
squeeze
you
in
know?
history.
Right. So I'm
that's
sending my
true.
dad to Europe. I'm excited.
Okay, Tesla's at $960 right now. We are appreciative of both of you guys coming on.